Good morning and welcome to the Forex Market Wrap, brought to you by Pepperstone on Monday the 9th of October 2017, and I'm Darren Sinden. Right, let's take a look at overnight changes, price moves to be aware of, and of course as it's a Monday we're reviewing weekly performance here. I just want to focus on the weakness really in sterling. Dropped 2.5% against the US dollar last week, a move of 1.8% against the euro, weaker against the yen by 2.4% and weaker against the Swiss franc by 1.4%. So a bad week for sterling all round. Brexit talks, as we'll see, are due to start again today, and I wonder whether we'll see a rally of any kind over the course of this week. Right, we left you last week before a short break with a chart of cable versus the sterling trade weighted index. At that point the trade weighted index was diverging to the downside. We've seen the net result of that in the previous slide. I just wanted to point out that both cable and the sterling trade weighted index are back in sync once more, heading in the same direction. Okay, what's on the calendar? Events that may move the market today. A pretty quiet calendar, to be honest. Holidays of sorts in both the USA and Japan. We've had the Caixin China Services PMI data for September. We'll look at that shortly. And to come, industrial production data out of Germany for August, year-on-year and month-on-month data. The Centex investor confidence data for the whole of the EU for October. And then you've got to wait till 2300 for some UK news, the British Retail Consortium like-for-like sales for September. So that's a pretty thin calendar, but there's one or two political events to make up for that perhaps. Right, breaking news and comment that's caught my eye today. Firstly, as we just noted, China's September services PMI data has dropped to a 2-year low at 50.6 versus the read for August, the prior month, of 52.7. One data point doesn't make a crisis, but it's interesting to see it's dipped down. However, Chinese stocks have rallied sharply after they return from their extended holiday. The Bank of China has cut its reserve requirement ratios for the nation's banks. That means that banks have to put down less money to gear up their balance sheets, so that's seen as being growth positive. Meanwhile, over in Europe, the departing German finance minister Wolfgang Schäuble has warned of a new bubble or financial crisis in an interview with the FT. And as I mentioned earlier, Brexit talks are set to resume today in Brussels. Right, food for thought, something for you to take away with you into the trading day and trading week. And just think about this. The S&P 500 is just shy of its all-time high, and investors anticipate further gains from here into the close of 2017. But is their optimism justified is the question? Or is the market over-leveraged and simply puffed up on borrowed money? And here we can see a chart of the US S&P 500 index and the amount of margin debt, i.e. the amount of money lent to investors who own stocks. You see they're fairly closely correlated, margin debt heading towards new short-term highs here. Right, thank you for your time today. Please take a moment to read the risk warning. Trading CFDs and FX on margin can be a risky business. If you're in any doubt about those risks, then please do contact your Pepperstone account executive.